Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading Free video for January 28th, 2025. What's this all about? Well, I thought I'd show you the VIX, the volatility index, and show you on how it works with the Bollinger Bands in relation to the S&P. It's an art, not a science, but it's worked pretty well lately. So first things first, I thought I'd show you how to construct it. So what I do with TradingView is I just press in VIX. Then I put daily chart. So I just want to go step by step. Then we're going to go and show you this. We're not going to have moving averages, ATR trailing stop, nothing. Then what we're going to do is you go up to indicators and you put in Bollinger. This is all part of TradingView that people are nice enough to share. Bollinger Bands filled. Now, why am I showing you this? Because the theory is that when the Bollinger Bands get over, when the VIX gets over the Bollinger Band and closes back under it, it's an SPX buy signal. And that when if it gets near the bottom, it's a big warning sign for the SPX. So I thought I'd show you what we're talking about in here, because remember, yesterday everybody thought the market would crash the next day. And we were saying that the VIX closed under the Bollinger Band. So we're just going to take this, and then on the right, I'm going to show you the S&P, the SPX, and I'm going to show you on a daily chart what we're talking about. So we're going to go back, and you're going to see this back right at the election. See the election right in there? Remember, we talked about the euphoria rally back on the bottom left, and that would lead to a sell-off afterwards. So as you see, you had the euphoria rally, and then you had the sell-off. The key wasn't that big a sell-off. It was the warning sign over here on the bottom left. That's what I wanted to show you. Up here, it got back under it. That was a buy signal. Got back under it. Well, you might say, was that a buy signal? Yeah, Christmas, it's a little rough, but it did work temporarily. Now, what do you see? Well, when I was on Thank Goodness Trader TV, I was talking about the warning that it was close to the bottom of the Bollinger Band. And the S&P was too far from the 20 moving average. So you're trying to combine it with things. So now you had where the S&P at least reverted to the 50 moving average. Right here on the upper right. And this got under here. Got closed back under it. Now, ironically, this is ironic. Tomorrow you have a lot of earnings coming out. So Wednesday night, you got a number of big earnings coming out. And what you're going to see in here that's interesting is because the Bollinger Bands really, this is a 20 moving average. So if you see the Bollinger Bands just doing that for 20 days, yeah, the Bollinger Bands themselves start pinching. So ironically, if tomorrow the FOMC and the earnings are sort of a non-event, you're going to get the VIX back under the Bollinger Band, believe it or not, and the S&P on the top, too far from the 20 moving average. That's that purple line. Believe it or not, that'll be another sell signal, unbelievably. But for tomorrow, what I'm going to be looking for is gaps. So we're going to go and take this and the NDX on the left. Take off the Bollinger Bands. In fact, you can take off like everything on the right as well, because we're just looking at gaps right now. And what I want to show you is this. So the NASDAQ filled these gaps. And now it could try to fill that one. Maybe it does with Apple and all them coming out. But as you see, the S&P on the right has almost unbelievably filled it. Unbelievably. Now, when you go to the ES after hours, and you put this in here, you're going to see that Friday, where was the ES? Well, the ES was right here. Right in that area. Right here. Right there. Right here. Then you got the gap down Sunday night. Believe it or not, we're really close to that area, unbelievably. Up here, yeah, I think that's going to be a good sell. That would be 30 points higher. Now, how about the NASDAQ? It's not even close. Up here would be a great sell because prior support becomes resistance. But that's, 300 points away. So we are watching that for tomorrow. I'm not saying that's going to happen, but we're going to be watching it. When it comes to the bond market with the FOMC, we had a long talk when I was dual broadcasting about this potential inverse head and shoulders. The only problem is that inverse head and shoulders bumps up against resistance real close by. So I'm not sure if the bonds are going to have that massive rally a lot of people are looking for. So tomorrow, I'm going to be watching the VIX. I'm going to be watching the upside gaps and see what happens after the FOMC. Take care and have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.